afternoon market recap. I left you on Monday about mid-afternoon with the candlestick, which once was that of a long day-ish sort of Morobozu candlestick. However, we really closed the session on Monday with that of a gravestone type of doji. It's almost that of a shooting star. However, of course, the location of the candlestick which showed up on Monday is most important. If this was showing up at a resistance area, I would be a little bit concerned about the actual structure and the sentiment behind the candlestick. However, we find ourselves once again still down towards around this pivot on the Dow Jones Industrial Average, 23.8 to 23.9. Since Monday and the close on Monday, we saw the gap, a very strong session on the Dow Jones yesterday. I think we closed up about 480 points. However, today, you can see that we have once again closed down about 218 points. So overall, so far the week has been that of the continued sort of whipsawish behavior, the actual non-really friendly structure, at least environment that we like to trade in as technical swing traders. Again, what you have to pay attention to is potentially this of the descending triangle. What we are still doing at this particular juncture is that we haven't broken out above this declining resistance area, nor have we actually broken down below this support area. And as such, we find ourselves drawing closer and closer to the apex of this triangle. Also, something to pay attention to, what has begun to occur is that of another Bollinger Band squeeze. I am thinking that this is going to turn into potentially that of a true Bollinger Band squeeze. The longer, if we choose to do so, move sideways. What you'll see is the lower Bollinger Band will continue to constrict price. You can see that it has such or since turned up, and that upper band has turned down. So again, if we continue to move into the apex, there are no guarantees behind this structural move. But if we were to see this continue to play out with the market really largely moving nowhere, so to speak, what we will set up is a full-on, full-fledged Bollinger Band squeeze moving forward. So that's another interesting development. Again, you just have to understand that we are in a sideways sort of choppy behavior or environment, but we are still continuing to hold this structural support area, as you can see on my screen, on the Dow Jones Industrial Average above roughly 23,500. Also, if you pay attention to this, I know I've been speaking about it, but it is very pertinent to where we find ourselves at the moment. This rising 200 simple moving average is still holding price, which is good to see. So as long as we remain above this, everything is a-okay, structurally speaking, for the financial markets. And you have to assume once again that we are going to see in due course the markets push on up collectively to close these open windows. It looks as though a lot of these individual companies in our top 12 list are actually basing, okay, which is good to see. But as such, we just haven't seen the actual follow through and the momentum that we're expecting to see moving forward. Also, the S&P 500, we closed down just shy of 15 points. What we do have is that of a doji type of candlestick. This is generally what we call a gravestone type of candle. We still have that pronounced upper wick, which does tell us that there are sellers just below this pivot here, coming in at about 2,670 points. You can see that we have battled to actually push on up above it. We actually haven't done this since we retested the 200 on a number of occasions. So again, if I bring up these Bollinger Band squeezes, you can see the bottom band is turning up and also that top band is turning down. So if we still continue to remain roughly just below 2,600 and 2,670, what you're going to see again is another Bollinger Band squeeze. But again, the macro picture is still bullish as long as we remain above this macro support, coming in just shy of 2,600. Interesting development in the candlestick itself. It does paint a short-term sort of bearish picture. We'll have to pay attention to this, but it's nothing to be concerned about, or at least on a swing trade time frame to be looking to take advantage of if you're expecting some downward price movement. It's only going to take us down to roughly 2,590. That's our best guess at this particular time. But as a whole, though, you can see these oscillators are still collectively turning up. The MACD is positive. At least we have the bullish cross in terms of momentum. We've got the RSI still at the midpoint, and the stochastics is still firmly crossing up to the upside. So this is just the short-term indecision of the market as a whole until we should see these markets collectively pushing up high. You can see the same is true for the Dow. RSI is relatively balanced, so to speak. We've got the MACD turning up or firming up, and so is the stochastics as well. Now, the only market, or of the markets that we haven't spoken about, again, very similar to the NASDAQ. We have that of a shooting star candlestick. However, it's showing up at a support area. So it isn't a true reversal candlestick. It does show a willingness, first of all, for buyers to jump into the market. The problem is that they can't hold it above these swing highs. The same is true again for the S&P 500. So you can see the patterns taking place. Also, when I do mention the word patterns, this does, or at least I've received a few emails anyway, of a lot of people talking about, well, are these some form of sort of continuation pennants, or even some really odd looking bearish sort of continuation patterns, or at least bear flags? And what I'm saying at the moment is no, they're not. The reason for that is because we're not in a confirmed bearish downtrend. You can see very clearly on the NASDAQ that we are simply oscillating between that of support and resistance, and we're expecting, even if it does turn out to be relatively ugly, that we are going to get a natural swing back on up, and again to close these open windows that we have established on the NASDAQ in the month of March as well. So please understand that and just be patient with the price action. I know it can be frustrating, but it's just what you have to sit through as a technical swing trader. Now, again, if I continue this discussion, a lot of emails today in relation to that of GLD. We've got a very interesting candlestick. We've had two triggers on this, one at 126, another at 129. Now, I don't blame you if you have been rather inactive on GLD, but obviously today we've seen a massive move, or at least the chart itself. I mean, the closing price was only up more or less $1. But we have this candlestick, a long-bodied candlestick, or at least the top wick is, and also the lower wick as well, with a very short or very small real body. This is showing extreme indecision. This is a snap sort of re-jerk reaction to a lot of what the Fed was speaking about today. And as such, the US dollar did pull back, but it wasn't a long day Morobozu. Let me just show you this. So again, you can see on the US dollar here, this is the US dollar index. We're only down, or we only closed down very slightly. This is looking like that of another bull flag type of pattern. Again, we're moving sideways, so you can't really sort of go out on a limb and call this a textbook bull sort of bull flag pattern. As such, the US dollar is still stuck within its range. That's what I want you to understand. And what that means is that with gold and silver, although we can see these really odd type of movements, or at least these big gaps and then sort of long day candlesticks, or at least showing the indecision. This is otherwise known as a long wave spinning top, by the way. As long as the US dollar remains range bound, you can assume that there's a good chance that over the coming days that gold's going to, one, come down and close this gap, but potentially even just move sideways. There is, however, the possibility for you to keep a 129.68 entry open. I understand people are in at 126.45, which is good. So again, this is short-term profitable. However, I wouldn't be banking on it at this current juncture. There is a good chance that this is just going to fizzle back down to roughly 127.50. But if we start flinching above 129.68, that's where you got to pay attention to, because if this is to occur, you're probably going to see the US dollar reverse hard, and that is something which it hasn't done yet. If I bring up the chart also of SLV, you can see a similar type of candlestick. We don't have the big gap, but we do have that of a shooting star. You can see that we have had similar candlesticks over here, and almost on this particular occasion here. Again, generally when we see these signals, it does indicate that we are going to come back down and retest this pivot. This is coming in about 1530 on the SLV ETF. So pay attention to this. The markets as a whole are rather stale. I know that it has, or we have seen at least some pretty bearish days, so to speak, followed by relatively strong bullish days and vice versa. They are sort of continually following one another and flipping back and forth. You have to understand macro support, holding support, oscillators turning up and potentially coming on up to close this open window. Once we get started, it's going to be hard to actually reverse that momentum. It's just a matter, first of all, of overcoming and clearing this resistance that we almost closed. This is dating back, what was it, to the 5th of April. We didn't completely close the open window, but we are still respecting this downward sloping resistance area. Now to move into some individual trades as well, we've got Apple, which is still stabilizing. No trade there on the moment. The same is true on Amazon. You can see that we are still sort of just fiddling between support and gap resistance. So it still has a couple of bucks, so to speak, to actually close these gaps. And it's going to be interesting once we do to see if the market as a whole can actually continue to push that bullish advance further. Now, looking at Boeing Airlines, we've got a number of reversal candlesticks. The good news is that we're still at support and we're still in a relatively choppy market as well. So 331 was the bullish entry. It was looking quite good as at the close last week. However, we've pulled on back down below. We're only slightly down, 327.36. This is something you should be looking to hold and looking to add if we break above 339 moving forward. We have Baidu, which we're pretty much smack bang on the actual breakout entry. Again, there's been a theme and a narrative to our class over the weekend, each and every Saturday in that pro analysis class, is that these are really good buy locations until the majority show up. And clearly right now, the majority just simply aren't in check with the changing sort of attitude and the sentiment as what the market is going to produce moving forward. So pay attention to this. Very low volume as well during today's session. We'll see what comes of this moving forward. Caterpillar is still holding up relatively nicely, still above 146, but we haven't seen the true breakout that we're expecting again with the Dow Jones Industrial Average. COP, by the way, is something that I am not in. It is a very nice looking chart at the moment. We saw another continuation today, up 89 cents. However, when we do overcome macro resistance, generally we will come back down and retest the actual resistance area that's coming in at a 60 handle. So even though we're trading at 63.23 and it's looking quite good, COP should, over the coming weeks, come back down, retest this 60, and then that's going to be the moment of truth as to whether or not this is going to continue its macro advance. Interesting to see, though, some individual companies actually breaking out. I think that's a very good sign of the market, or what's indicative of the market moving forward as well. So pay attention to COP. CVX is still pushing on up. First entry was 113. That sounds like a very, very, very long time ago. All the way over here in the month of February off the bounce, but you can see again we've had to sort of hold through this. Again, it's been the theme, the narrative. It's what we've been speaking about and really expecting. But you can see that we're starting to really form some traction. We're now above 118.50, so this is looking quite good. A very profitable trade there. Again, it's in its infancy. It is just, or you're just going to simply have to hold through, of course, this choppy market environment. We've got Google still stabilizing just above 1,000 and also 1,050. This is quite healthy as well. We've got this very obvious trade target up here at 1131. However, we simply haven't really got moving as at yet. I'm expecting this whenever it chooses to do so. We've got Goldman Sachs pulling on back down as well. No major trade here whatsoever. It's something that we've been really just staying clear of, and we really haven't really been doing all that trade analysis on it over the weekend. With any of the financials, really, it's something that you'd rather avoid. We've got IBM breaking above 155. It's pulling back down, but this is looking quite good. It's at 154 at the moment, but ultimately, again, we're looking at this naturally oscillating back up to 162 and ultimately 165. We have Netflix also, which is still, stuck between 280 and also 330. We did get a little pop today. This is something that we've been toying with for a number of sessions, but today we closed up $5.60. Let me zoom in so I can show you this a little bit better. We do have that of a shooting star type of candlestick as well. So you can see across the board, the financial markets are setting off similar types of candlesticks. We've got a lot of individual trades that are also producing the same type of candlestick, or very similar, or at least close relatives or cousins, so to speak, of various other candlesticks as well. This is really interesting because generally when you see these patterns, it goes one of two ways very quickly. Either you get a very strong advance, or you'll see a very strong reversal, so to speak, and come back down and test these lows. So we'll see how this plays out during Thursday's session, but it's something to be aware of moving forward. And we also, to conclude with, have Tesla, which once again is respecting this 310 pivot. Not enough to go short, not enough to go long. Just allow this to move around this general vicinity until we allow the oscillators to reset, so to speak. And we might have more information depending on if this back test is going to hold, and obviously, well, what follows next, which potentially could set up a bunch of profitable trades moving into the month, or at least closing out the month of April, but also moving into May as well. So that's the Wednesday afternoon market recap. If you have any questions, please email me, success@pivotpoint-trading.com. I'll be back with you tomorrow for another market recap. I wish you all the best. It's James signing off on behalf of Pivot Point Trading. Farewell.